Hello guys and welcome back to the channel. Today's video will be a new entry into the Tokenomics series. We'll be covering Ergo in today's video. Before we get into the video, please like and subscribe to the channel to see more of this content, and don't forget to join the Discord if you need any help with crypto mining or crypto investing. The link for that is in the description below. For those wondering what tokenomics are, I'll give a brief overview of what that word means now. Tokenomics is a broad term which describes all the elements that make a particular cryptocurrency valuable and interesting to investors. This includes everything from token supply and how it's issued, to things like utility case or basically what the goal is to achieve in the crypto market. So therefore we'll be covering all this information and more, plus at the end of this video I'll be doing a price prediction for the coin that we are talking about. So the Ergo mainnet was launched back in July 1st of 2019. It was created by a crypto developer called Alex Chepurnov. He has had an extensive past in the crypto development space, as he got his start as a developer on Bitcoin back in 2011. Ergo is a relatively new crypto and has just celebrated its 3rd birthday. Ergo describes itself as a next generation smart contract platform that ensures the economic freedom of ordinary people through secure, accessible and decentralized financial tools. Because Ergo is early in its life cycle, it means it's not listed on too many exchanges right now, but you can buy it from exchanges such as KuCoin, Gate.io and CoinEx. That's just a brief overview of Ergo, but we'll be diving into all the tokenomics and major features of this coin, which I think would be useful for you to know as a user or an investor. So when it was launched, there was no pre-mine, no initial coin offering and no pre-allocation to the founders or venture capitalists. This is good as it favors no parties involved in the coin. This is the best way to launch a cryptocurrency because a lot of other coins have allocations of up to 50% to developers. This means that they get rich while the other investors don't have a chance to get ahead of these founders. The block time is 2 minutes and the max supply of Ergo is not a round number because of an emission schedule which we'll touch on later. But the max supply right now is 79,739,924. The current circulating supply is just over 59 million Ergo, which means over half the coins have been mined so far. For Ergo mining, they use an ASIC resistant hashing algorithm called Auto-Lycos. It tends to favor Nvidia cards and AMD has around 20% less efficiency on this algorithm. The last part of the tokenomics is the block halving. For Ergo, they have implemented an emission schedule, which is their own unique way of halving mining rewards. Right now, the block reward is at around 48 Ergo with a volume of 7,500 transactions per day. The hash rate on the mining network fluctuates between 20 terahash and 30 terahash, but has gone up since the Ethereum merge, all the way up to 60 terahash. Many coins choose to halve the block rewards at a certain block number. Bitcoin is the biggest example of this as they have halved the rewards every 210,000 blocks. However, Ergo has implemented an emission schedule which lowers the block reward in a curved fashion instead of halving the block reward at a certain block number. Originally, the first 2 years of mining, the block reward was set at 75 Ergo per block. Then after 2 years, the block reward would be reduced by 3 Ergo every 3 months. If you do the math, it means that after 8 years, all of the supply would be mined, and the block rewards would come from the form of DApp fees that are on the network. So that was the original plan, but recently Ergo team proposed a new emission schedule, which was called EIP27. They asked all Ergo holders to vote on this new proposal, and there was an overwhelming amount of support with over 90% of holders voting for it. This new proposal sticks to the original emission schedule up until the block reward gets down to 3 Ergo. Once it hits this, it will continue to have a block reward of 3 Ergo for the next 9 years. This means all the Ergo will be mined in 17.83 years. If we look at the emission chart, we can see that the block reward goes down on the grey line to 3 Ergo. Then the orange curve is the supply of Ergo, which will all be mined around 2040 time. Lastly, we see the emission contract in blue, which will spike in a couple of years and then move downwards until the contract is finished. Implementing this way of reducing coin supply is new in crypto, and Ergo has innovated this for other cryptocurrencies to use in the future. Now, the reason that they have introduced a new emission schedule was because they want to give developers time to make dApps on the network. If they have more developers, it means more dApps. This means more fees on the network for when the block rewards run out. Ergo is pushing for more miners to stay on their network after the block reward stops. This is good because more miners means more decentralization and a more secure network. Next, I want to touch upon the Treasury fund that Ergo has set up to incentivize developers to come and develop on the Ergo network. So during the first 2 years of the mainnet launch, the Treasury would receive 7.5 Ergo from every block that was mined. All of this was collated into a fund with around 4 million Ergo. This is 4.43% of the total supply of the coin. So after 2 years they stopped it, and now the Treasury fund is full and can start to be handed out to those who want to develop dApps on the Ergo network. This is a great way to help developers, and the network has seen some great additions of dApps. Also, the last block reward being in 2040, it means that we'll see more developers join the network, and fees through these dApps will support the miners after 2040. One dApp that I found very intriguing to privacy is the Ergo Mixer platform. This is very similar to many mixer platforms like Tornado Cash, whereby you send Ergo into the platform and it mixes it through multiple addresses and then sends it back to an address of your choosing. Many criminals use these for money laundering and to mix stolen crypto, but the real world purpose is to be, if somebody found your address, to make sure they didn't find your next address, you would send your Ergo to be mixed and then shoot it out to another address which nobody knows. This is great for privacy, and you don't even have to go through a website to run the Mixer program. It can be done through your own computer if you want. Next, they have multiple NFT platforms and projects which they display on their homepage. We have seen that NFTs make up a large amount of volume on the blockchains like Ethereum and Solana. So it's good that this coin has set up infrastructures for NFTs. The main way to buy and sell NFTs is through the Ergo Auction house, which runs a little differently to main NFT platforms like OpenSea. Firstly, the UI of the project is better, as you can see current bids on the NFTs and how much the maker would like for them. This makes it feel more like an auction and not just a place to buy and sell. It's also very cheap to mint on the auction house, as Ergo is very cheap right now, and you can mint for under 1 Ergo on the network. I've actually made my own NFTs on this platform, but I'm not going to promote them as I want the sale to be authentic. Lastly, Ergo Auction House also allows for the sale of tokens and other things minted on the network. For example, if you wanted to start selling shares in a company, you could mint them on the platform and sell them there. The most popular NFTs are a team called Ergo Gnomes, which is a collection of gnome NFTs which sell upwards of 200 to 300 Ergo. There is a small metaverse community on the Ergo platform, but I think it just needs time to grow. Metaverses haven't really started to take off as planned. With things like Facebook switching to Meta, it was a disaster in my opinion. This was because the feel of it wasn't planned, and we hadn't really seen much well-designed metaverses so far. Even the big ones like Sandbox and Decentraland aren't up to the standards of today's video games, so over time I think more people will start to develop better metaverses, and Ergo might be one of the platforms which starts to produce a good metaverse. So they have 4 listed on the official Ergo page. The first is called Blitz TCG, which is a trading card game kind of like Hearthstone, where you battle opponents with cards, and these cards can be purchased on the Ergo auction site. The next is called Eternion, and this is a game that takes place across multiple planets in space, kind of like a No Man's Sky type game where you explore different places and collect things. The third one is called Sigma Valley, and this is probably the one that I'm most interested in, as it's an up-to-date visualization of the Ergo community. So if you're in the community, you can sign in, meet other people who are involved in the coin. This is a way of networking and finding like-minded people in your space. You can walk around different plots of land and get to know the people who have built stuff on their land. So the Sigma Valley falls under the normal type of metaverses we see like Sandbox or Decentraland. Lastly, we have Ergo Games, which is just a platform to support a range of different games which run on the Ergo network. Now let's move on to the price prediction for Ergo with a 5 and 10 year price prediction. Ergo currently sits at a price of around $4.50, but has had a top price of $23 back in the launch of Ergo, as we can see on the price chart. Then we have 2 spikes for the crypto run in 2021 and the one early on in 2022. It has a market cap of around $250 million. I think right now the price of this coin should be a little bit higher, around $7, but because of this crypto winter, we are seeing lower prices for all coins. Intrinsically, I think it should be at $7 for what it has to offer as a cryptocurrency. Now for the 5-year prediction, I think we can see a price of around $12. This prediction is based on the emission schedule, as these large blocks of 75 Ergo or 48 Ergo will not be around in 4 years' time, which means that the supply will be dramatically reduced, and this will drive up the demand of the coin. So when this happens, I think over time it will drive the price upwards to, $12. Now for a 10-year prediction, it's a very double-sided coin, no pun intended there. But what I mean is that Ergo needs more developers to help with exposure of the coin. They need this to help the emission schedule miners, and the teams need to continue to innovate and propose new updates like they have been doing so far. In 10 years' time, I think we can possibly see around a $20 coin, but it could also fall below that if the emission schedule doesn't pan out as they thought. So that's it for the Ergo coin Tokenomics. I hope you got some idea of what this coin has to offer and why you should use it or invest in it. If you did enjoy the video, please hit that like button, subscribe to the channel for more content like this, and lastly put a comment below for the next coin I should do in this series.